Comes try to record this session, then we go deep into it. Can you see my chat? All right. So I think everyone can see my chat. Now, today I had so many amazing trades that I only took 3, but I wasn't on my computer to share them. I would have shared them to the group. But I was following up these trades. And currently I've just taken profit on one at this level. And I also saw Diego took that trade too. And in the morning we also had someone take this nice trade. Yeah, so I got the sell from here to here, right? Since we had the 61.8 level of the retracement of this, we're going to look at Fibonacci areas in a few minutes before we look at that list. Yeah. So I had this trade and a W pattern to the upside. I had this sell that had the divergence up here to the downside, but I jumped in from here. This was around 4 a.m. that I got in. Then I added positions at around 6:45. That's when I added positions around here. So it was a quick scalp that it just went down there and touched there. I had 2 extension levels. I hope you guys can hear me properly. I had 2 extension levels, and this was a zone 2, this down one here. So I expected that if the market would break around here, I wanted it to come back to this area and shoot up. So I bought this market. I saw this market and bought it, but I jumped in late for the buy. I jumped in from around here. Maybe this. I jumped in from around here. So my entry was supposed to be immediately after the engulfing. So this was supposed to be my discount entry to the upside. As you all know, the strategy is very simple. It just needs practice and practice. You don't need to know all those complicated terms, but at the end of the day, you can add up every concept that I can show you and develop a very simple strategy. And all you have to do is practice. Practice helps you with your to be able to replace something if you see it again. And it's not that it's going to be perfect, like you always have to see that exact thing. No. There's a way you react to it when you see it. Like you just react automatically. You know that, okay, now it's time for me to end. Like this buy yesterday. Yesterday, this was Monday. I didn't trade, but this was a nice buy. The buy would have happened immediately. Our entry would have been at that discount price. You get. So right now, J is in a channel, right? It's shooting to the upside because the DXY is selling rapidly. And the reason why this buy happened was because the DXY sold, it broke a major line. This was the sell. It broke a major, it broke here, retested there, then sold. And right now it's breaking. It has broken an order block here. And I still expect it to sell. Though we're entering the Asian session, we want to see how the action is going to be on the DXY. Yeah. And I remember saying in the video that I did that if we have a break here and it reaches, we may sell. But right now we may get a buy back again. Because we want to see that a nice pullback that people call sweeping liquidity, come back to this low, to this high it left, then give us a major sell. And we shall be looking for a Fibonacci area to take profit. So what does that mean? I still expect GBPSD to buy. Reason being, we have this inverse head and shoulders there. Now, yesterday, I can play for you guys the video I was supposed to release yesterday night. Video was there, but there's no sound. I just realized that there's no sound when I was done with recording, and I said I'm not going to play it again. But that would have been a nice video because I literally analyzed, and the way I analyzed is where GBPSD came back to play. For today, this was the buy. This was exactly, and we had an order block down here. We're going to look at Gatleys in a few minutes. We're going to look at Gatleys in a few minutes, and I'm going to show you guys how you can use Gatleys to your advantage. We shall start with Fibonacci's, then later we go to the Gatleys. We're going to look at the butterfly patterns and the Gatley patterns. Then in the butterfly, In the bat, we're going to look at the butterfly, we're going to look at the cat list, we're going to look at the bat patterns. So the bat patterns, we also have the alternative bat patterns. We have the pumpkin patterns, we have the Halloween bat patterns, and in there we also have cipher patterns. We have so many. So it's up to you to go and do your due diligence and make research about it. Yeah. As you all know, the concept I trade is much relative. It looks simple here, but as you practice, you get the concept. You can't just get it from day one. No. Because at the end of the day, today, this buy that happened in late was a concept that we had a psychological level there, and we had a Fibonacci. As in a meeting, I didn't share a setup because I wasn't on my station, but look at that. Just look at how the market reacted on the 61.8, right? So right now, my take profit was on that negative 38.2, and at that area we had a psychological level. The strategy rhymes on its own, right? If you practice them more, you get the concept, and you just open your chart. 5 minutes, you already know what to do. Five minutes, you already know what to do. It takes practice. So that psychological level was there. We had the 61.8 level there, and we had the doubling pattern. Look at that. And then engulfing. So my entry would have been at the discount. Okay. And at that discount, we had a break and the retest of that psychological level. That would give us more buys, right? So I would take profit from here, but guys, there is a trend line running through that would hold water. Let me remove this out. So I'll just wait. Now, what am I looking for tomorrow? I'm going to wait and see if the Asian session is going to play around there and see its reaction. Wait, if it comes back here. Now we have a tendency of the market coming back. May come back there, play around, range around, come back there, and this would give us a nice buy to the upside. Though it doesn't mean that it's supposed to happen. We can have that break, and if it does a retest, and this is a very nice trade for us to take, we shall be looking for the market to come back to these areas and collect momentum to the upside. The strategy is not hard, right? It's not hard. Though there are other things we add in there. There are other things we add in there. So, without wasting much time, let's look at what brought us here today. I don't want to keep you guys here for long. You know, if you keep guys for long, they don't get what you're saying. They don't get what you're saying. So let me just load down the slide. So for the guys who don't see my face, man, that's how I like it. Like I don't just put out my face out there. I think this year I've taken, if it wasn't for going to studio with Mitro Plus and all that stuff, for those interviews with Bob and stuff, I think I've only taken like 2 pictures this year. Because okay, apart from the video I did a risk. Yeah, I just hate putting out my face like that. So guys, let's let me load those slides, and I think it was this. We're going to look at harmonic pattern trading. Well, I'm going to just give you guys the basics. Then if you feel like you want to trade using this strategy, this is a strategy of its own, but you can add it to your strategy. In that when you see it, you're trading and you see it, you don't just be blank. You get contact. Well, what do you mean by contact? I haven't got that. I saw your message, something like contact. You deleted it so far. So, guys, let's start with Fibs or Fibonacci ratios, right? So Fibonacci was invented by this guy, Leonardo Fibonacci. He was an Italian mathematician. And the concept is not only used in Forex, guys. It's used in architecture, so many things. So we just bring it into trading because it holds water. It holds water. The same way, let's see, we're going to look at a ratio that is not supposed to be a Fibonacci ratio, but it was added there because with time, technical analysis proved it right that the market retraces to the 50%. We're going to look at that in a few minutes. So, what's a Fibonacci sequence? A famous group of numbers, beginning with 0 and 1, in which each number is the sum of the two before it. Like, look at this. We have 0, 1, 1, 2, 3, 5, 8, 13. Now, how does the Fibonacci sequence come about? If you get this 0 plus a 1, you get a 1. You get a 1 plus a 1, you get a 2. You get a 1 plus 2, you get 3. 2 plus 3, 5. 3 plus 5, you get 8. 8 plus 5 is 13. 13 plus 8 is 21. So it goes up to infinity, right? It goes up to infinity. I hope you get this still in the middle. So it goes up to infinity. That's how the whole thing works. Oh, sorry. Sorry about that. So that's how the whole thing works. So what is the sequence here and move how it's formed? You get. Now I've explained how all these numbers come about. If you add 13 plus 21, you get 34. You get 21 plus 34, you get 55. You can do the math with a calculator for those who use the simple, basic, comfortable math. Okay. So what is the example? So the first four numbers give us the easiest ratios. Here is the first four numbers give us. I want you guys to just pay attention to this because most guys say trading is just about clicking by yourself. But at the end of the day, if you never think, there is nothing someone is going to say. Even though it's in another strategy, maybe say work of semantics. You're going to know what he's saying because you know something about it. Even though you don't trade it, you get. You have to just have information about something. Even sellers in town know what's going on. You're going to ask him where do these clothes come from? At least he will lie to you. He will lie to you that they're from Japan. You get just because he wants you to trust him. At the end of the day, okay, those are lies, but here you have to know your facts straight because someone out there knows what you're saying. And if you do a mistake, he's going to come and challenge you. But if you have your facts, you can challenge everyone. Even though someone is good at trading more than you, at least they'll give you that respect because you know something that they don't know. You get, and at the end of the day, something that they don't know can help you in this market. That's where the difference is. It's about psychology. Psychology is not about greed. Um, People think it's about how your entries. No, it's just the simple, basic human related things. Greed, overconfidence, patience. That's psychology. You get, that's why someone is like, we are all different psychologically. Those are the things. At the end of the day, even though you start trading a 1 million, do you know a one? It's okay. Sorry for going off topic, but if you're trading a 1 million account, right? $1 million. I'm not saying you trade it, but if you're trading a $1 million account and you make 10% of that, that's 100,000, right? That same person who flipped, who managed to grow $100 and added $1, or I mean, and added $10 on that account, can also trade the $1 million account. But if you think at the end of the day, look, I'm trading $100, it's less. Okay, it's less, but if you're not able, just go and challenge yourself and be like, how long can I retain this $100? That's when you know that you can't manage a $1 million account. Yeah, so it's literally it. Again, it's literally it. So let's go back to what we're looking at. So the first four numbers give us the easiest ratios. That's the first one, two, three, four. What am I saying? If you divide by one, you get one, right? Which is equivalent to 100% ratio. If you get 2 divided by 1, you get 2. Okay, it's supposed to be the answer. 2 divided by 1, you get 2, which is equivalent to 200%. Now, these ratios are so many, only that we take just a phase out. We take just a phase out. So if you get a half is equal to 0.5, which is equivalent to the 50%. You get. So let's look at the other ratios. So here we have got the 100%, the 50%, and I've also got 200%. So if you look at larger numbers, the ratios between those numbers remain the same. They're constant along the sequence. Now, have you guys heard of the golden ratio? Most people think the golden ratio is only the 61 point, between the 50% and the 61.8, but it also takes in the 1.618, yet or the 0.618. That's it. That's just the inverse. So the essential part is that numbers get larger. The coefficient between each successive pair of Fibonacci numbers approximates to 1.618, or its inverse. You get. So This proportion is known by many names: the golden ratio, the golden mean. Sometimes you're going to find a sign like this. Now let me show you guys this sign. You're going to find a sign like this. Okay. Okay, that was kind of. You're going to find a sign like that. Okay, my writing is not perfect, but you find a sign like that. That shows that can mean to stand this or this, golden mean or this. Those who went to school know this. Okay, not okay. I didn't mean it that way, but those who dug deeper know that sign. So let's look at these numbers: 233, 277, 610, 987, and 1597. If you divide the number by the previous number, you get 618 point, 161.8. Just divide this by this, you get 161 point. If you divide this by this, you get the same. If you divide this by this, you get the same. Someone can use a calculator to do that math. So the other example is what? If you divide a number by the next number, you get 61.8. Now I'm just showing you how the ratios come about. If you divide this number by this, you get 61.8. If you divide this number by this, 377 by 610, you get this. Same applies to all, guys, all. So one last one. If you divide a number by two numbers behind it, okay, there are also two numbers. But if you divide a number by two numbers behind it, you get this. You get this divided by this, you get this. You get. Now, if you divide a number by two numbers in front of this, you get the 38.2. Now, some people don't know this math. They think, by just trading and it's done. Let's make money. At the end of the day, you're supposed to make money. Okay. So, how do we use these ratios? Now, I'm going to show you how the ratios that are missing here are formed. I just want you to take it in your head that which ratios are missing around here. Okay. We have the 38.2, we have the 50%. This is not the ratio. Even though we Google it now, this was just added there. So now is that making it? Tell I'm in a need here. So the 50% is not a Fibonacci ratio. It was just added there because they respect that price always comes back to the 50% of it. It always comes back to the 50% of this move. Now, 61.8 and this. Now, what happened? If you take the square root of these two numbers, what do you get? Let me just take this off. If you get the square root of this and this, sorry about that. If you get the square root of 61.8 and 168, guess what you get? It gives you 78.6. You get and 127.2. That's how we get the 78.6. You get. Now, if you get the cube root of these two numbers again, you get the 88.6 and the 113. We're going to look at how the 88.6 and the 78.6 help us in organizing harmonic patterns. Hope you guys are still with me. Speaking. All right. So thank you all for all joining. Yeah. So let's go on. So now, how do you use these ratios? Now, look at this. Point A to point B, point B to point C. This is 100% retracement ratio. This is equal to 1. You get. And how do you get that? Just divide this by this. You're going to get the ratio. BC divided by AB. That's the retracement. Let's go to the next. I don't want to hold you guys for long. This is less than 100. This retracement is less than 100. Remember, 100 came here, right? 100 came up to here. This is less. Let's look at the next. Oh, here's one. There's one missing. There's supposed to be one more than 100, where the market goes more than 100. You get, I missed out one. I make these notes by myself, so I think I just left it out. So harmonic pattern. Now this is where the kind of tricky part comes in, because you're supposed to know how to use Fibonacci ratios in order to do this part. Okay. So harmonic patterns are price action patterns where a sequence of price movements follow well-defined prices or defined ranges of fib ratios. So when the price, where was it? So when the price movements follow or respect ratios, price enters a specific reversal point or zone. You get, that's how they basically work. So you're supposed to get the fib area. It's an area. It's never a point. It's an area. You're supposed to know what you're doing. Because if you mess up, you're going to be blinded. The whole move, guys. That's the problem. Now, one discouragement about harmonics is they may blind you on a move that's already happening. They can blind you. So you're supposed to just use it as confidence. Let's tell you again, use it as confidence. You see all those other strategies, Wyckoff's, what's the thing with the waves? Elliot's wave. You can just add them as confluences to your trading. Don't mind AIA, FBG, all that stuff. Those are confluences. You get, those are just confluences. Once you know that, trading is going to be very easy for you. You get, you can take a few minutes and just know what's going to happen. Okay, you can't be 100% sure. That's not there. If you find someone saying that, stone them. You can't be 100% sure. That's why guys will say, come and trade NFP. Nah, bruh. NFP is a 50 move, guys. When he's lucky, tell him, bro, you're lucky, man. Your technical analysis was on point. And yeah, it paid off, but next time, it can go against you. That's NFP. Have you guys watched a movie called Industry? It's a series. The way guys wait for NFP, it's a bell, man. If those big banks, Goldman Sachs wait for NFP like that, who are you retail? And it's so sad that we are facing a lot of how do you call it? Not TikTok traders and posting profits that are not there. A man posts $10 million. Why isn't Forbes coming to your door to come and review your assets and all that stuff? Guys, Forbes would be on your door because Forbes likes recording stuff. At least they will add you on the list of top millionaires in the country. So don't just get fooled around by what people plant around with. If he has posted $4 million, tell him, has Forbes interviewed you? Just ask him that. Let's go on. Classification of harmonic patterns. We have the bullish one. We have the bearish one. You get, now bullish ones point a reversal to the upside, and the bearish ones point a reversal to the downside. Let's go on. Now we're going to start with the bullish bar. You get, now I want you guys to just pay attention. I know someone came for this live without a pen and paper, but it's fine. That's up to you, bruh. We don't know why we are here though. I don't know why we are here though. So this is X. The move always starts with X here. Always X to just just have someone watch. All right. Really calling me. Yes, Bob. Yes. So yeah, sorry about that. So now the bullish bus, well, it's what we are looking at, right? It starts from X to A to B to C to D. That's a bullish buy. Now, where does the retracement come from? Pull your Fibonacci tool from this area to this area to get point B. Good. Now, the market has to be, the easiest way to plot out a bullish bat is when the market is already coming this side, because you're looking for the move to take you up. So most times when you're looking for one, you have to find one that is already forming. You don't just say, okay, it has reached here. Now this is where a scalper comes in. Scalpers will always get this retracement. If he has missed this move, he's not going to jump in from here. The way amateurs try. I know there's no amateur here on this call, but you don't jump in front of the train, right? Because you don't know where it's going to reverse from. If I jumped in from here and the market just starts reversing, I'd be like, someone is watching me, that stuff. So you always have to wait for a discount price. And the discount price always comes to a Fibonacci area. So harmonics, you always have to find like maybe this move, you get, and wait for it to come to a D. But let me just show you how they're formed. If you get the retracement of XA, it has to lie around the 0.382 to the 50%. This is the 38.2% or the 50%. Okay, so it has to lie between there. This point B has to lie between the 38.2 to the 50%. You get, that's how point B, that's where point B is supposed to lie. If you pull a fib from here to here. So once it has gone up, right? Point C, you have to pull your Fibonacci. Let me just change the color. You have to pull your Fibonacci from point A to point B. So that you get point C, which has to lie between 0.382 to 0.886. You get, you have to pull your fib from here, point A, point B to get point C. Now, after it has rejected, like it's now coming down, pull your fib from X to A and wait for the market and see the reaction. And it has to lie between 0.886. You get, it has to be in 0.886. That's when you go for a long. You get. I hope you guys understand that. I hope you guys understand that. Though there is a way guys also decide to trade. Instead of pulling from here to here, they can pull it from there, get to there. Now this is for someone who is using extension. You get, because you can see it has gone beyond. It's in 2.618 because they pulled this fib from here to there. You get, now that's why it has gone to the 200. That's why I told you to know how this is formed. You get, that's why I started with how all ratios are formed. I think we should move on to the next. Right? Or I repeat one more time. Bullish but a bullish bar pattern. It takes the formation of a bar. Okay. Now, XA is where the move starts from. To get point B, the market had to bounce off between the 38.2 to the 50% area. So the market goes up. You pull your fib from here to here to get point C. You get. Now, once it has rejected between the 38.2 or the 88.6, you let it flow. You can pull your fib from here to here and just to lie between the 1.618 to the 2.618. Or you can just pull it from here to get the 88.6 level, which is D. And that's when you look for patterns like the W pattern here and get an engulfing and a discount price and go long. You get, and go long. So that's basically the path. It takes practice. It takes practice, guys. Now let's go on to the bearish bar. It's just the inverse of the other one. Just the inverse of the other one. You can see just the inverse of the bullish bar. Now this, it starts from here. The market is flaunting down, right? And it won't be perfect like this. You get, the market, if it was this perfect, everyone would be enjoying. It moves in its zigzag way. So you're supposed to just be sharp about it. You get, that's when your psychology and the time you spend on the market comes in. So pull your fib from here to here. Point B is between the 38.2 to the 50%. You get, that's point B. So you pull your fib from here to here. Point C is going to be between the 38.2 to the 88.6. Then to get D, you can pull your fib from here. There are two ways. You can pull your fib from here to there to get D, that is supposed to be 1.618 to 2.618, or you can get the XA, that is 0.886 retracement to get the sell. Always wait for a pattern here. You get always wait for a pattern. Check that sell. Don't just jump in because you think, hey, that Lee. No, always wait for confirmation. That's what makes you different from traders who jump in early and then their stop loss is taken out, and you're just coming in and you're riding liquidity to where it's being driven to. So let's go on. Let's go on. Let's go on. Let's go on. Run, keep this for long. Now, the alt bats you get. We have the bullish and the bearish alternative bats. And I think we're going to just look at a few. Then we call it. I think I'll finish the rest maybe next time. Because if you ever add guys, at the end of the day, no one learns this shit. So these are the alternative bats. Now this one is inside. You get, you pull your fib from X to A. Point B is supposed to be between the 38.2%. You get, and if you pull your Fibonacci from A to B, point C is supposed to be between the 38.2 to the 88.6. So if you pull your fib from here to here, point D is supposed to be between the 200 and the negative 361.8. Now, if you don't have these extensions, you can just pull it from here to here and find out the extension. You can apply extensions on your fibs. I'm going to show you guys on the chart an example. So it's between it has to be in the 113% to get the buy. Let's look at the next. I'll show you guys an example on the chart. Okay, that there are others, but we're not going to go that side today. Let's stop here. Now, we have the bearish alt bat. Oh, sorry, bearish. It's just the inverse of the other one. Pull your fib from X to A. B has to be in a retracement of 38.2 of XA. Again, AB is a retracement of XA. That's simply the math. Now, pull your fib from this to here to get point C. It has to be between the 38.2 and the 88.6. You get. Now, if we take it to the upside, right? D is just a retracement here. That's how you guys know it. Now, should we look at one more? Should we look at one more? Or we go to the chart and try to find one? All right, let's go to the chart and try to find one. Now, guys who joined in earlier, I showed you this trade. For those who joined in late, that's looking at the energy thing. This is the index for energy, S&P 500 and BSE energy. That's the index for energy. I wanted to see something and maybe send it to the guys in for a good investment. But I rejected that. I was so busy today. Let's try to find out one and see. It's going deep. Just one example. Slide was supposed to be for. Yes, let me go down to smaller time frames. I want to get a perfect one. So those who are interested in it, try to learn something. Those who are not, it's up to you. Man. Money is yours. Sorry, I have to infinity scroll back to the left. But yeah, there are current ones on GBPSD, but I just wanted to find out a perfect one so that you start with small baby steps until you're able to see the ones that disturb your lot and all that stuff. Yeah, so I think we're almost there. Yes, my move is like knocking. I don't trade the whole day. I only take 2 setups a day. So today I took 3. Now this was a nice one. Now let's find out what type this is, right? Let's pull our fib. Let's pull our fib and see what type this was. Sorry. If we pull a fib from here, right, to up here, what do we find out? We find out that this is point, okay, this is point X to point A to point B. Now we are looking for B, right? How do you say it? Bring it up there. Now look at where B is lying. It's at the 61.8, right? That's when you run. I don't know which one this was, but that's when we check what type it was. And we can see that, okay, this is not a bat. This is not a bad pattern, but it can be one of these down ones that we haven't looked at today. Like it's a Gatly pattern. Sorry, guys. This is a Gatly pattern. But anyway, let me explain the Gatly. The Gatly is simply, because we may not get another example of a Gatly. The Gatly is simply, let's go to the Gatly. Now the Gatly is XA to get B, it has to lie between the 61.8, and to get C, you have to pull a fib from A to B. That is between the 38.2 to the 0.886. Now, to get C, or I mean D, it has to be at this 0.786%. Now let's go and repeat that. We pull our fib from here to there, right? And we find out that, okay, it's lying at the 38.2. Now we look for point C. We have got point B here. We look for point C. Pull up the fib from here to here, and we can see that it's at the 38.2 to which area? To the 88.6. It lies between that. The 88.6 is above here, like here. So this one gets it well. So now we want to find our point C. Point C, we pull it from here to up there. Now I removed it, but this is the 70. This is the 78.2. I always play around. This is the 78.6. Sorry, 78.6 area. You can come here and add it there around here. It's there between that. So that gives you a buy opportunity to the upside. You get. Now those who know liquidity would have taken profit from there. So that's simply a Gatly pattern. That's simply a Gatly pattern, guys. Let's see. See if we can get marked out on the Gatly. Here's this one. Just come lost, but I have to scroll it. Wow, there are some. Okay, you can get one on a current chart, but I only tried GBPUSD. And you can get like Cypher or something. Now this one, this is too long. This is too long, but it would be one of either pumpkin, but let's see. It would be a Halloween bat or a pumpkin bat. Yeah, this would be a Halloween. Okay, this is too long because the Halloween bat has to come around. So this is too long. This is too long, so it invalidates the whole thing. You can get a good one. There is so many, but you have to just know how to do it. This is a pumpkin. Yeah, this is a pumpkin. Give us a spell signal. It was too short. That's a pumpkin, but you can always get these harmonic. Like there is one here right now. Though this one on the 5 minute time frame would be a lot better because this is our point A, point B, point C. I mean point B, point C, point D. So the long comes in. Yeah, this is also either. So you have to know how to draw your fibs out. Now if you go in the smaller time frame, let's say that guys, I'm about to end the live, but I need you to practice. Just get one, get like harmonics. I mean, get like a Gatli pattern or a butterfly pattern or something like that. So you can start it from anywhere. Now this one stops on the 38.2. This point B. Now this is a Halloween bat. Comes immediately at the 30. You can see that this one almost touches the zero. But this is the area of the 88.6. So this counts as a Halloween bat. So this would be your entry. Let's see if that would be anything. Yes, this would be a nice entry for the buy side. Yeah, so you can see that, okay, this is beyond analysis, but this also gives us another pattern right here. So this pair may definitely give us a buy. You get, may definitely give us a buy. So you bring that in, this is the 5 minute time. You bring that in and you add confluences like trend line. Those who draw counter trend lines, the ones on lower time can get in a trade like a buy. Yeah. So it needs a day with it depends on the on the session. Don't just trade session. So that also gets us through, right? So guys, I think that's it. Allow me to stop here. And we're just taking a few questions to maybe five. Yeah, so allow me to take any questions. Any questions, guys? Just type them in the chat or request to speak. So for the guys in the main group, I'm going to make a video talking about everything. The guys in the private group, I'm going to make a video talking about all the types of harmonic patterns. So there are many. There are ciphers too. We haven't looked at them, but yeah, let's get you guys some. You can find easier notes for those who think. You can see Gatly, butterfly, crab, bird, shark, ciphers. There are so many. There are so many, but there are those ones that hold more water. These are the main ones. You get the butterfly, Gatly, crab, bird, shark, ciphers. So in the bat, we have so many types. We have the alternative bats too. So you have to know that too. So guys, any questions? You can see that the buy is likely to happen. This Gatly is hold water again. So any questions? Or we call it a night. So today was a good trade. Today was a good day in trading. I actually made some good amounts of money. So I've not yet been interviewed by the Forbes. So I'm still a broke trader. So I'll be like, who broke guys? Don't flaunt around. Yeah. So Bob, are you on? I don't know if you've prepared that the crypto classes were supposed to begin this week. I don't know. We haven't talked. So guys, I think that's it for today. I'm not seeing any questions. Allow me end here. Honest, do you have anything to say? Honest is typing. Let's see. Just a minute, please. Everyone is typing. So if there are no questions, I'm going to end the live. Anna says, no, nothing to say, just thank you. Okay. That's it. That's all right. I hope everyone makes money though. Forex has money, but the problem is, now let me just give you something. See me, I was broke, man. But at least right now, I can't go somewhere and fail to get a meal. When you know that you've started getting money is when you can enter a restaurant and you don't need to think about it or save. Like, you don't need to do that. You just walk in there and order for something to eat. But it takes time. Like for Forex, yes, you can wake up now. Today, Bob sent something about the guy would change $250 to it was $250 to just it was 200. Okay, it was termed as the greatest trade. The guy changed $250 to $1 million in 4 days. In 4 days, guys, everything is possible. Yeah, I know most guys are that sometimes you come close to giving up, right? You come close to giving up. Even me, sometimes I think about it. Most times, when I'm making um videos for YouTube, I be like, is it worth it? Is it worth it? Sometimes I want to just chill, but I just keep grinding. I just keep grinding. This thing is actually hard, but at some time, softens. Like you just know I'm going to wake up and get that trade. You get that self belief. I know the group is quiet right now. People have issues. It's not that people don't want to talk, but people have issues. You get people have issues. So guys, allow me end here. Just keep grinding. Make your strategy as simple as possible. And if you want me to question you, go and check out. Look at the traders in Africa, right? The top traders. At least I've talked with Jeffrey Benson before. I've talked with Bandali. Bandali, I talked to him during COVID. Bandali of South Africa, yes. By then I just started trading, like 2 weeks into trading. As I was almost giving up on it, but this guy was telling me, look, I'm 18, but I'm rich. These guys don't use hard strategies. Bandali uses break and retest of a trend line. Just that way trend line bounce. Nothing like order blocks. Nothing. And which time frame is it doing that from? The 4 hour time frame. Is like the reason why I can trade any pair because it's trend line. Break and retest. Trend line bounce, proper entry. I take in the market. But the moment now I'm going to show you guys a breakdown of how the whole thing works. Right? Look at this. You come on Forex, right? You type what is Forex. You get beginner's luck. You hit profit, right? After some time you lose that money. That's when you're like, I think I need to learn something. Now you go to YouTube Academy. YouTube Academy. And on YouTube, YouTube you see thumbnail. Let's go to YouTube. I'll show you guys what I watch. I always watch stuff. So you go and find thumbnails, how to flip accounts, all that stuff. Then you start watching a lot of junk. But you remember, at the end of the day, one thing can just be holding you back. This is what I watch. I'm either listening to music, watching this guy, wanting to buy watches. I have so many watches there. I have so many watches. I'm always looking at this shit. Or I'm looking at Forex. That's basically it. So you come here and you search how to make flip all these things. At the end of the day, you're confusing yourself. Yet it's just basic, like it's just basic. Get one thing, focus on that, do research around it, kill it. You get, but we all just keep bouncing back. What helped me is that me when I started trading, I just jumped on to one guy and that was it. Yes. So yes, it's up to you. I'm not saying everyone can be profitable, but there is one thing someone has to focus. Just focus. People don't talk about it in psychology. All they talk about is greed, but it's focus. Yes. So yes, thank you for being here and listening to my trash. Have a nice one. Let me end this.